take data, which most of them don't. I've seen generally the 20 minutes per chronic care management unit billed, because that's the minimum, excuse me, amount of time, and that's non-provider time. So just to be cautious and not overstating, although it doesn't have any direct impact on reimbursement because they're all paid on PPS and fee schedule now. Excuse me, don't overstate those direct costs. John, did that answer your questions you had yesterday?
Yes, I think it did. It's and like you said, I think it's just pulling out the salaries of the direct care or the direct person that was dealing with it, and then the overhead for benefits or anything else is allocated. So I think you're right on point with that, and that's exactly what we've been doing.
Okay, and I don't even include benefits in that calculation, because my position is the benefits you're paying whether you're doing telehealth or not.
That's yeah, I agree. That's an allocated cost, so it's just simply the salaries of those people that are doing the service.
Right. Okay. Grant and contribution income, again, do not offset that against expenses, even if it's restricted or for a designated purpose. COVID funding, I've had a lot of questions about this, and gosh, over the last year or so. A lot of those questions have come in through my NRHA activities, but this is a quote out, an excerpt from the CMS FAQs. I don't think that well, I know it's the same. This is a reference back to February 19th series, but none of those COVID-related grants, payroll, paycheck protection, CARES provider relief funds, or any of those other HRSA, HRSA grants or anything else should be used to reduce expenses. Medicare bad debts. I find this is problematic in FQs because they lots of times don't take the time or the effort to maintain the documentation, so they can't claim anything. And there's three in my lingo. There's three types of Medicare bad debts: regular, charity, and crossovers, and all three of them have some different rules. The provider must maintain documentation to support their claims on these bad debts, and that should document their collection effort, the consistency of their practices with their internal policies, and then of course the listings of bad debts that has to be submitted. Here's a link to the Novitas website dealing with bad debts. They have a sample form out there, and that example still refers to the old CMS 339 form. And of course, the 339 is no longer required, but the form still refers to that, so don't let that throw you. But the allowable amount is only the unpaid coinsurance. Of course, FQHCs are not subject to Medicare deductibles, so we're just dealing with coinsurance here in FQHCs. But it should not include any unpaid amounts, coinsurance, or so maybe associated deductibles. I don't know if CCM in an FQHC is subject to deductibles or not, frankly. But anyway, they're not allowable because they're paid on the fee schedule. And the amounts must be written off as a bad debt in the records, not written off as a contractual adjustment. Now, these are general rules that are applicable to all provider types. These are not just FQHC specific. But the allowable bad debt is then paid at 65% of that amount that's claimed. So for regular bad debts, the patient must be liable for the coinsurance. You must be billing the patient within a reasonable amount of time after Medicare pays or after you get the Medicare remittance advice. And generally, that's 30 to 45 days. Must bill it regularly for at least 120 days. and then you must have stopped all collection activity on that account and must have written it off as a bad debt during the cost reporting period that you're going to be claiming it on. And if you have some unique circumstances, maintain documentation. That might be where you've had a Medicare secondary payer involved, a Medigap policy, and you got denied, and then you had billing issues or something like that that interrupted or aggravated those time frames. But if that's your situation, then maintain that documentation, because Novitas will select a sample of usually they will select a sample of the bad debts and request that documentation on desk review. Excuse me, for charity, then if the patient meets your eligibility criteria for your sliding scale, of course, all FQHCs are mandated to have a sliding scale. So if they meet the eligibility for that sliding scale and you write off all or a portion of that Medicare coinsurance, at the point you make that determination, it's automatically eligible to be put on that list as a as a Medicare bad debt. And of course, only the slide portion is allowable as a charity bad debt. So if according to your slide you're writing off 50% of the coinsurance, then that 50% of the slide, is a charity bad debt, and then you have to proceed with regular collection activities on the remaining 50%. And then that, if it's ultimately not paid, would be a regular bad debt. And be sure to keep I recommend to be sure to keep all of that on separate lists, bad debt lists, which I'll talk about in a minute. Crossovers are Medicare and Medicaid dual eligibles. And I think in Louisiana Medicaid pay and the Bayou Health plans pay most of these coinsurance amounts. So there may not be much in Louisiana. That's different state to state. But they must bill the Medicaid program or the Bayou Health plans and get that payment, that portion denied. And that denied portion then becomes allowable as a Medicare bad debt whenever that determination is made. This is just an example of a regular bad debt log. It's pretty simple, but it needs to have all of that information on there, at least all of this information. It can have more, but at least all of these data elements on there in order for it to be eligible. And again, I recommend using a charity and regular and dual eligibles on separate lists. This is a crossover example, a little bit different because this has the Medicaid numbers on it. And I recommend those separate lists because when Novitas does their sampling, if they have an error rate that applies, you can usually get them to, if they find errors, pardon me, on your regular bad debt list, you can generally get them not to apply that error rate or the same error rate to your crossovers or your charity bad debts. So you can get them to use different error rates. Visit counting, only face-to-face encounters with Medicare providers should be included in the cost report. Do not include nurse-only visits and eliminate any visits for other non-covered Medicare services, like dental, of course, is not a non-covered service for Medicare, and other behavioral health staff, like the non-Medicare providers. If you have counselors that are doing behavioral health visits, those visits should not be included in the cost report, nor should which I'll talk about in a minute. I'll bypass that for a minute. Again, chronic care CCM services are not visits, and telehealth virtual visits are not visits, so they should not be included. And Medicare eliminated the productivity standards back whenever they started PPS a number of years ago. Although you have to report the FTEs or you're not reporting the FTEs on the visit section anymore. You report those back on one of the S schedules. This is just a list of the various S schedules. The S-1 is part 1 is just some basic information payment questions. S-1 part 2 is required if you're consolidating providers. S-2 replaces the old CMS 339 form, and then S-3 part 1 includes the visit data, which I just talked about, and then parts 2 and part 3 include, that's where you report FTEs by various job types, job functions, and some other employment data. The A series is the cost determination, including the trial balance, reclassifications, and adjustments. And you may or may not need A2-1 if you have related parties to disclose. The B series is the actual apportionment of cost of Medicare, and then calculation of the Medicare flu and pneumonia, and now COVID vaccine administration. E series is the settlement calculations, and only one, F-1, that's revenue and expenses. So diving into a little bit more detail on a few of these. As I tell providers, read that certification that your CEO is going to sign, because it actually does put some teeth into things if CMS really wants to look at something. Again, I've not found them to do anything but bad debts and vaccines in recent years. It's not to say that they can't. S part 1, S-1 part 1 is required by everybody. It's got the basic information, identification information on there. Line 13 reports the consolidating information, and line 14 also lists all of the different FQHC names and CCN numbers which are being consolidated. And before you can consolidate, you must have an approval, because you will need to put that consolidation approval date in this worksheet. I think that will give you a level 1 error if you don't. Lines 23 to 26 are GME, relate to GME, and there are other lines on here which I have no idea why they want this information on FTCA and malpractice and premiums, and whether you rent or own your facility. All I can figure is it's got something to do whenever they do rate setting or reset the base rate. They use that in some form or fashion. Got nothing to do with actual costs or allowability of costs. Part 2 is required for each of the consolidated provider numbers if you are consolidating multiple provider numbers. And the information there is much the same as it is for part 1. Again, S2 takes the place of the old 339, just simplified and streamlined those questions relating to ownership and related party transactions, requesting if you had wanting to know if you had an audit or not audit. If your expenses are different, then you need to prepare a reconciliation back to worksheet A. Lines 5 to 7 are GME, relating to GME, graduate medical education. And if that's a new program, then you must submit additional documentation to support those answers. 8 to 10 deal with Medicare bad debts. Again, there's an example in the instructions. Lines 11 to 16 deal with the PSNR, and you should provide a crosswalk from the PSR to the cost report. And the preparer contact information is at the bottom of that schedule. S3, excuse me, part 1 relates to the visit counts that I talked about earlier. I haven't used Title V for probably 20 years, the old maternal child health program. I'm not sure why it's still in these cost reports. Medicare and Medicaid visits, and then all other visits need to be tabulated in there by clinic number, FQHC number. GME line 5 do not include visits on line 5 for GME if that is part of these 2 HRSA grant programs, because those are reported separately as non-reimbursable GME. The contract S3 part 2 is contract and benefits. The top portion is contract labor costs, and then the benefit costs. And again, I think they use that data, excuse me, whenever they're rebasing the FQHC PPS rates. FTEs are based on normal paid hours by the various job types that are listed on that worksheet. And by the way, there is, I may have said this already, I did a handout, I had a sample FQHC cost report, an example. So that's one of the handouts, if you want to go back and take a look at it. Worksheet A, total expenses reconciled back to your audit or financial statements, and then through reclassifications and adjustments gets to the total allowable cost by category in here. Expenses reported in column 3, again, should agree with the financial statements or explain the differences. There are certain subscripted lines that can be added if you need further breakdown on those. And the segregation in this worksheet is important because it drives other calculations within the cost report back on worksheet B, in the worksheet B series. The general service lines are 1 to 3. There's a couple of notes here. I do not know why, but do not include electronic health record costs in medical records. I guess put it in A and G. That doesn't really make any sense to me, but again, I guess it's got something to do with their rate setting when they readjust the PPS base rate. Do not include vaccine or supply costs for flu and pneumonia in the pharmacy or medical supplies. Those need to be reclassified. If they're in there on your trial balance, they need to be reclassified down to the appropriate line. Excuse me, because that's where the calculation is pulled from, those specific lines. And I just, as a general recommendation, don't include any direct costs of medical or mental health or any other direct costs of patient care up in that general service section. Covered direct services are 23 to 37. And there's lines there for physicians and PAs and nurse practitioners and other provider types. Do not include intern and resident costs if it's a teaching or an intern resident program. In this section, they go below. I'll get to that in a minute. I include any other direct medical or mental health, covered mental health expenses in column 2, like example, fringe benefits. If you track those by position in your trial balance, then I include those with the appropriate line, such as physicians or PAs, nurse practitioners, in as an other cost in column 2. 47 to 50 are other reimbursable pass-through costs. 47 is allowable GME. Do not include anything in here, any costs in here, if those are funded by those 2 types of HRSA grants from that earlier slide. So you're not counting visits, you're not counting those costs as reimbursable GME costs. 48 and 49 are direct non-compensation. So these are the direct costs of acquiring the flu and pneumonia vaccine, the drugs and any other medical supplies that you can identify with those specific vaccine types. The new lines 49.1 and 49.11 are directly related to COVID-19 vaccine administration supplies. Those are new lines that are in that new transmittal, that April transmittal that I included as a handout. And again, there are no compensation amounts, no salaries, benefits, or anything included in any of those, because we'll get to that. That'll be calculated, excuse me, on B-1. The other FQHC services, these are non-covered services. 60 is dental, audiology, other mental health, etc. Diagnostic lab, radiology, telehealth, and chronic care management have their specific lines. The non-reimbursable is 77 to 80. The GME, and this is where you would put the costs associated with those two HRSA grant programs. And then I have a note here. I see cost reports that have fundraising and they put 340B contract services down as non-reimbursable. I do not. I exclude those on A-2 and get them out of the cost report so they don't drag overhead with them. Reclassifications, you just have to do A1. Your typical reclassification here would be getting the flu and pneumonia and now COVID vaccine administration onto the correct lines, or telehealth or chronic care management, and get that out of the reimbursable section and put it down in the appropriate section. A2 is expenses, adjustments to expenses, where you would remove the non-allowable costs, offset other operating revenues like interest income, rebates, refunds, and so forth, expense refunds, where you would adjust depreciation for the AHA useful lives if necessary, and adjust for those capital leases if it's necessary. Related party adjustments on A2 comes from A2-1, which even if there's not an adjustment necessary, it should be disclosed as a related party disclosure. Worksheet B is, excuse me, the allocation of the apportionment of allowable costs for each provider type, and that starts with the direct costs that come in from worksheet A, divided by the total visits from that comes from the S schedules, and then it allocates general other direct costs, and it allocates general service costs to equal the total cost, and divides that by the visit counts to get the total cost per visit, and then multiplies that out times the Medicare visits to get the Medicare cost. This is a calculation which I've had questions about. Well, how they allocate the direct care costs and the general service costs, and I have to go back to the manual just about every time. So I actually put the calculation here that is used from that sample cost report that that's in the handout, to show how those multipliers are derived. The direct service cost is pretty straightforward, but the general service cost, you got to go around Robin Hood's barn to get to that one. But this is the actual calculation from that example cost report, if you need that for some reason. You get the cost of the Medicare services. Again, that's no longer used in the cost settlement, in the cost report settlement. If you do have Medicare allowable GME pass-throughs, then that is calculated on this schedule on worksheet B, and that does go to the reimbursement amount of that does go to worksheet E and is included in the cost report settlement. The vaccination pass-through is an estimate of the, I'm actually going to skip this slide and go straight to this. This is just an example of an Excel worksheet that I do, which highlights the total number of vaccines given. Now the COVID is new in this set of updates from this April update, and that's COVID administration. And there's a monoclonal antibody that none of my clients or FQs that I'm associated with are doing monoclonal, but there's another column for that if you have those. And estimate the number of staff and physician minutes that are associated with each vaccine that's given, and that should not include, again, any overhead staff, front desk staff, call center or anybody else in. It should only be staff, medical staff minutes per vaccine, and that gets the total number of hours per vaccine. Pardon me, and I match that up to the total number of hours of the clinical staff. And that clinical FTEs that I put in here should match the salaries that you have put in the section on worksheet A that subtotals on line 37, the physicians and the PAs, the nurse practitioners, behavioral health, because that's the salaries that are going to be coming through on worksheet B-1. And that gets the vaccine fraction, which is what is input on worksheet B-1, that's then used to multiply to get the overhead and the the compensation and benefits and the other costs that are derived from the pass-through. The Medicare settlement, generally, the regular visits are paid on a PPS amount. If you have GME, approved GME, you're going to get a pass-through. You get the vaccine pass-through coming from B-1. You're supposed to input the Medicare Advantage gross payments. If you have them, there's no impact on settlement there. Input primary care and co-insurance. Bad debts, if you've maintained them, you're going to get 65% of that. You memo list the crossover amount from your crossover list, if you had any. Then it calculates sequestration, the 2%. Of course, we're under sequestration abatement now since May 1st of 2020 through December 31st of this year, unless Congress changes it. And then that's matched up to the settlements the payments which come in from E-1 to come down to the settlement. If you've got a protested amount that is included in that settlement, I honestly don't know why you would anymore for FQHC, but if you do, you would put that on 21 and attach substantial documentation to support that. E-1 is simply a list of the payments. F1 is the statement of revenues and expenses, and I'm going to finish up here really quickly. And this is how you would report the COVID-specific funding revenue as outlined in the CMS FAQs, and actually now in that there's actually a line now for COVID funding, which is line 28.5 on F-1. Rest of this stuff. So now I don't know if there are any questions, or Stacy, is there anything in the chat function, or I'll just kind of open it up if there's any questions or anybody have any discussion.
Hi, Tommy. No questions other than emailing a PowerPoint slide, which I can definitely do, Bonnie. I apologize. I did lose connection, but I came right back in. So if I missed any questions, I apologize. Do we have any questions now? Feel free to unmute and ask a question, or you can type it in the chat box.
Hi, I'm Bonnie Phillips. I'm with RKM Primary Care. And thank you for putting this on. I do have a question about the 340B expenses. We're opening a pharmacy here in about a month. Is there anything that John needs to know about?
So you say you're opening a farm, does that mean you're opening a retail pharmacy?
Yes.
Okay. Well, that would be all non-reimbursable. All those costs would be non-reimbursable.
Okay.
If it were me doing the cost report, I would exclude all of those costs on A2. I would take them out of the cost report. I would associate some kind of overhead with them, but I would not allow them to pull. I don't know what size you're talking about here, but I mean, I've seen some pretty large retail pharmacies with FQHCs, and if they're left in the cost report on one of those non-reimbursable lines, it takes a lot of overhead out of the cost report.
Okay.
I think what
So
Tommy,
I would calculate some amount of direct, what I'll call direct overhead, and exclude that along with your direct drug and staffing costs and any other, and that might include an allocation. I don't know if you're renting a building or I mean, there's all kinds of variations there, but.
Right. Well, I mean, we already separate out a lot of 340B expenses, and that's where I'm putting it. As far as the pharmacist goes and so on and so forth, I've got that separate. So the only thing I really need to worry about is separating out any overhead, to sort of allocate it out to the pharmacy.
I think what you're saying is to make a shopping list of all of the overhead people, supplies and things like that you've got that might be associated with a retail pharmacy, and then we can carve that out with the direct cost.
Okay.
Right, and that might be, if you've got pharmacy retail software, that goes with it. Now, when you say you're segregating 340B salaries and so forth already, is that 340B cost for drugs that you're buying and dispensing within the FQ, or is that under your running your contract pharmacy services?
Our contract.
Okay, yeah.
So we have contract now, but we're opening our own. So that does help. Like you said, the software, I need to take that out of there. Okay.
Yeah, anything that's I would say anything that's directly related to the direct operation of that retail space and pharmacy, as well as any specific overhead. And I would keep the overhead as minimal as you can.
Mm-hmm. Okay.
Because that taking out excessive overhead, I mean, it not only damages you in terms of the greater population when HRSA resets the base rate for PPS, but it also impacts that overhead calculation for your vaccine administration, your vaccine pass-through.
Okay. That was my only question.
Anybody else?
That was a great question. I was getting ready to say, anyone else?
Thank you, Tommy.
I'm going to email after we adjourn. I'll go ahead and email the PowerPoint to everyone as well.
All right. Thank you, Stacy.
Thank you. Y'all have a great afternoon. Thanks, Tommy.
All right. Thanks for the invite, y'all.
Okay, thanks.
Stay safe.
Contact
Bye.
me if you have any follow-up questions. Bye-bye.